Testing. Testing. Testing 1, 2. Okay. I am just about ready to get started here. Hopefully there'll be a few people joining me today. If not, this is going to be a scintillating subject anyway, and you can listen to it after the fact. But if anybody is here joining me live, say hi. Let me know where you're listening from. That's always fun. Or let me know who you are, because I know a lot of you that like to attend my Money Monday trainings. So this is going to be kind of an intense one, I think anyway. And it's going to be very hard to make it a short subject, but we're going to do our best here. So I'm going to go ahead and get started. Hello and welcome, my Life with Crypto brothers and sisters. I'm your host, Kelly Sunshall. Thank you for joining me for another Money Monday crypto training. I've been a crypto investor and educator since 2015. Today, we're going to finish up the last training in our series called 8 Must-Know Blockchain Narratives to Watch. Today, we're going to cover the topic of crypto and taxes. So let's go ahead and jump in. Of course, taxes are everyone's least favorite subject. And to address the topic of crypto and taxes and to answer questions about how it is taxed and how can tax liability be reduced, we must first understand how the IRS defines crypto. How does it think about it? And these are the questions that I'm going to attempt to answer in today's training. First, is virtual currency and digital currency the same thing? Second, what does the IRS say virtual currency is? Is crypto fungible? What does fungible mean? And why does it matter? What is an NFT and how is it taxed? How is cryptocurrency taxed in general? What are some ways I can reduce my crypto tax liability? Can I trade crypto within an LLC and save money? And can I claim a loss on my tax return for crypto that I lost or that got stolen? So there's a lot to cover, so I'm going to keep running. And if you have any questions, feel free to put your question in the comment, and I'll do my best to answer. First off, is virtual currency and digital currency the same thing? This was first answered by FinCEN, and FinCEN stands for the Financial Crimes Enforcement Network back in 2019. They put out a 30-page guidance, which was very good, and it clarified lots. If you want to search on that and read more about it, it's called FinCEN Guidance, FIN 2019, FIN 2019 G001, and you can see it on the screen there as well. The IRS.gov website now states that a digital asset can be one of three things, but we're going to talk more about what a digital asset means in just a little bit, because the IRS has kind of changed how they talk about it over the years. Thanks for joining me, whoever's here. Say hi if you'd like. So the IRS says that a digital asset can be a convertible virtual currency, i.e. cryptocurrency. We'll talk more about that in just a moment. It can be a stable coin, or it can be a non-fungible token, NFT. We'll talk more about those in just a few minutes. And I've got a note here for myself to go to my CryptoGuard ebook page, ebook 1, page 9 and 10. So I'm going to try to bring that up here and be as organized as I possibly can. Book 1, page 9 and 10. So I'll put that over here on this screen so you all can see it. So I am using my the 5 ebooks that I wrote on crypto and taxes a couple of years ago. The content in these books is still valid. So I'm going to use these to help me answer some of these questions. And the first one is virtual currency the same as digital currency? And the short answer, when I first wrote these books, according to the IRS, was no. Virtual currency is a subset of digital currency that is not legal tender. So that's really their sticking point is, hey, Mike, one is legal tender and one is not. So digital currency is real legal tender, like digital fiat currency. In other words, when you log into your bank account, you're looking at ones and zeros. You're looking at numbers on a screen. They're calling that digital fiat currency. Virtual currency, although it is digital, is not considered real legal tender. So that is their stipulation. Let's see if there's anything else down here that's helpful. Convertible. All right. So the IRS likes to use this term convertible virtual currency. And in my world, convertible virtual currency is synonymous with cryptocurrency. It is a currency that can be bought and sold back into real currency. It's a cryptocurrency that can be bought with US dollars or sold back into US dollars. So if you go to Coinbase and you buy your Bitcoin with US dollars that you've transferred into your account, Bitcoin is considered a convertible virtual currency because it will go back and forth between a fiat currency. And a lot of crypto will do that now. Not all of them, but a lot of them. So, Ether, Litecoin, Bitcoin Cash. There's so many of them. I can't even think of all of them. And that used to be a big deal. It's not as much of a big deal now because a lot of them are convertible. Let's see what else I got on here. So convertible virtual currencies like Bitcoin, Ether, and Litecoin are cryptos that can be bought with US dollars and sold back into US dollars. They can also be traded for other virtual currencies. Virtual currencies and convertible virtual currencies are not legal tender anywhere in the US, but as some of us might know, they are legal other places around the world as legal tender. I won't go into that subject right now, though. And I think that I'm going to stop there and jump back to my other document, and it says to go to page 10. So let's go ahead and see what I got on page 10. Digital currency is also called digital money, electronic money, or electronic currency. It is distinct from physical currencies such as banknotes and coins. It has properties similar to physical currencies, but allows for instantaneous transactions and borderless transfer of ownership. We're back to this is real and legal tender. And a little bit further definition of virtual currency and convertible virtual currency refers to a medium of exchange that can operate like currency, but does not have all the attributes of real currency. So this gets to be a fine line trying to decide, that is crypto money or not. Well, technically it is, but you can't use it to pay your taxes. So therefore the government says it's not. All right, let's move on because I do have a lot to cover and it's going to be a long training today. So let's move on and look at question number 2. What does the IRS say virtual currency is? Now, this is a slightly different question. This was answered by the IRS through their Internal Revenue Manual. Why does this matter? This is a big deal to know. The Internal Revenue Manual is the manual that they use to teach IRS agents. And yes, as a tax consultant and an accountant, I had access to the IRM. So I'm going to look at now CryptoGuard ebook number 1, page 11 and 12. So we're just going to continue on here. So the short answer from the IRS manual is virtual currency may be a capital asset, inventory, a form of payment to acquire goods or services, compensation, or held as an investment. Why does this matter? This matters because you'll see all over the internet how everybody will say, oh, crypto is taxed as a commodity. And my answer is crypto is taxed based on what it is when you receive it. And that's what this is saying right here from the IRM. The IRM is the Internal Revenue Service Manual used to teach IRS employees. And the IRS states, the IRM is the primary official source of instructions to staff that relate to the administration and operation of the IRS. It's a big deal. And here are these hidden gems. I'm just gonna keep this simple, and I'm gonna go back to up here where I said, and I'm gonna talk more about this answer. Virtual currency may be a capital asset. That's what most people talk about. When you buy and sell crypto, you're buying and selling a commodity which is treated as a capital asset. You'll either have a capital gain or a capital loss. Well, what if you get paid as an employee in crypto? It's treated different. It's treated differently. It's actually could be taxed twice, because when you receive it, you are receiving income as an employee, ordinary income. When you go and sell it, you now have a capital asset. So you could have ordinary income tax and you can have capital gains tax. So I'm going to leave it at that, because I could easily talk for several hours about this subject. So we're going to have to try to keep me talking, keep the answers as short as I can. So that's my answer to what does the IRS say virtual currency is. It depends on what it is when you receive it. Next is crypto fungible? What does it mean and why does it matter? Fungibility refers to the interchangeability of one unit of a commodity for another similar unit. For example, an ounce of gold has the same value as any other ounce of gold. Similarly, one Bitcoin has the same value as any other Bitcoin. Hopefully that will hold over time. If crypto wasn't fungible, it would be more difficult to trade on exchanges. Each token would have to be sold as a unique piece of property, like an antique painting or a collector edition of a baseball card. And that takes me into the next question. Well, then what is an NFT and how is it taxed? A non-fungible token, or NFT, is a special type of cryptocurrency that represents something unique. They are not mutually interchangeable. An NFT is a digital asset that represents ownership of another asset, like a piece of music or art. Now, I believe NFTs are going to become really big in the future. How far in the future, I don't know. I think NFTs will be used to represent assets like houses, like your deed on your house. So more to come on that subject. At present, NFTs are taxed like other forms of cryptocurrency as property, subject to the corresponding short and long-term capital gains. Okay, I don't see any questions jumping at me at the comments, so I'm going to keep going. You guys are all experts on this topic of crypto and taxes. All right. How is crypto taxed? As I said earlier, it depends on how the crypto was received. Traded for another crypto, it's treated as property. General tax principles apply. When the asset is sold, traded, or otherwise disposed of, a capital gain or capital loss usually occurs. If it's received as wages, it's income, and it's taxed at the fair market value of when you receive that, and it's treated as ordinary income. Later on, when it's sold, as I said earlier, it gets taxed as property with more capital gains or losses. Now, if you receive crypto as an airdrop, it's treated as ordinary income. You use the fair market value of that token on the day you received it to determine how much income you received. That gets reported as other income on the Form 1040. And I think I've said enough about it. I'm not going to go bring up the CryptoGuard. But if you decide to get the CryptoGuard ebook series, this is where you would find it. Ebook 2 on page 54. Number 6, what are some of the ways I can reduce my crypto tax liability? Now, I get asked this question a lot by people that I talk to, and I'll tell you as much as I can in this short training. Tax loss harvesting is one of the big ways to take advantage of reducing your tax liability. I've used it as well. What does that mean? That means tax loss harvesting is when you made a boo-boo and you bought high and the prices fell. And so now you're like, what do I do? Do I just hold it forever, or can I sell it and take the loss? Well, you really have to look at your overall portfolio, look at your overall tax return to make that decision, but you can. You can sell your crypto for a loss, and that will reduce some of your capital gains. The problem with that, of course, is that you're only allowed $3,000. If that hasn't changed, I don't think it has. You're only allowed $3,000 of capital losses, and then they stop and they have to flow over to the next year. So if you've got a $50,000 loss, you're only going to be able to take $3,000 of that per year. So what's some other ideas? You can trade crypto within an IRA. I was just asked this question the other day. And this is kind of a unique idea. By using a crypto IRA provider, you can invest in crypto within a retirement account, which allows tax benefits like yearly deductions and tax deferred growth. Investing in a Roth IRA allows you to avoid capital gains tax on the sale of crypto assets that increase in value. So this is the important concept. If you buy a crypto within your Roth IRA and it goes up in value and you sell it, as long as it stays in that Roth IRA, you do not pay taxes on that gain. By utilizing a Roth IRA for crypto, you can benefit from tax savings and have no immediate tax implications. However, keep in mind you may still owe tax when you withdraw from an IRA. And I don't remember all the IRA tax laws off the top of my head. And so a Roth and a standard traditional IRA are treated differently. You'll want to do some research on it. Number 7, can I claim a loss on my tax return for crypto that I lost or that got stolen from me? I'm going to read what I have in my ebook on this one. And I will tell you that the Tax Cuts and Jobs Act, I forget what year that came out, changed what type of losses are allowed on a tax return from hacks, scams, or theft. Not just crypto, but any kind of hack or theft. So let's see. I've got ebook number 2, page 69. Let's see. Ebook 2. Let's bring that over here so we can all see it. How are losses from hacks, scams, or thefts treated on the tax return? Short answer is personal losses are no longer allowed. I'm sorry, but I have to be the bearer of bad news. Business losses, however, may be allowed. The Tax Cuts and Jobs Act changed what is allowed. Bottom line, if the loss was incurred in a trade or business or in any transaction for profit, the loss may be allowed. Crypto traders who treat their trading as a business are more likely to be allowed to take these types of losses. Excuse me. Individuals who trade only occasionally as a hobby will not be allowed to deduct the personal loss. I think I got too many does in there. And here's where you can go read about it if you want to. You can Google or search on IRC code section 165 and look up losses. General rule, there shall be allowed as a deduction any loss sustained during the taxable year and not compensated for by insurance. Limitation on losses of individuals. For individuals, the deduction under this subsection shall be limited to losses incurred in a trade or business, losses incurred in any transaction for profit, though not connected with a trade or business. And this is the clause that helps crypto traders. Losses due to trading for fun or hobby, unfortunately, are not deductible. So there you have it. So the last one I'm going to end on here today is an important question. I also just got asked this question the other day. Can I trade crypto within an LLC and save money? This question is related to the prior question, which is, well, if you have losses and you're in a business, yes, you can take them. If you're a hobby trader, not so much. So what are the rules that say that I can trade my crypto within an LLC? And the first question you have to answer for yourself is, am I a hobby trader or a professional trader? Now, be careful. Don't just jump the gun and say, well, of course, I'm a professional trader. I'm a part of the Let's Crypto program, and I'm learning how to be a trader, and I'm doing this regularly. Well, let's go look and see what the IRS says is regular. And then I've got a couple of links here, and I'll put these 2 links. If you want to know more about this subject, I'll put these links in the comments section after I get done with the training. So let's go look at CryptoGuard ebook 3. And I'm going to, what page did I say? Page 26. jump down here and find page 26. All right. So how I have it in the ebook is what's the difference between a crypto holder and a crypto trader? Someone who trades infrequently and or holds long-term may be considered a hobbyist trader with investor status. A hobbyist trader with investor status. A frequent day trader may qualify for professional trader status with ability to treat activities like a business. Now, when I first wrote this, there was no official guidance on the subject of professional trader status for crypto. But I do have some guidelines that I do believe still apply very much. And those two links that I gave you will give you some more information about the subject. So I don't know if I want to talk about the court case, but here, there was a court case back in 2018 that stated crypto is treated as a commodity, and that definition allows traders to claim professional trader status. The trader must seek to profit from fluctuations in price, not from dividends or interest or long-term capital appreciation. Well, that's going to be tricky. The activity must be substantial, continuous, and regular. And here's what really throws a lot of people who think that they can trade inside a business. So what is substantial, continuous, and regular? This is what the IRS says. Daily or weekly trading, 3 to 4 trades per day on average. That's a day trader. Monthly income from trading. Minimum 720 to 1,000 trades per year, and at least $15,000 trading income per year. And this number was from a couple of years ago. It may have gone up now. The trader must make the election to use the mark-to-market method of accounting under IRC Code Section 475. And one of the links that I will put in the comments will take you to a good article written about the mark-to-market method. It gets more complicated to try to trade within an LLC. The report trades on Form 4797. That's if you're a tax person, you would care about that. Trader status allows more than $3,000 in capital losses. Remember earlier I said if you have a capital loss, you can do tax loss harvesting, but you're only allowed up to $3,000 of those losses per year. And if you can do this in a business, then it becomes, I believe, ordinary income losses. It's a totally different subject matter, and that's as far as I'm going to take it today. Let's see what else we have. Set up an entity for business. S Corp is popular. LLC is also popular. Any asset held long-term must be treated as an investment and reported on Form 8949. I think that is enough on that subject. So, can I trade crypto within an LLC and save money? Only if the short answer is really only if you can be considered a professional trader. So if no one has any questions or comments that you want us to talk about, I'm going to say that's it for today's training. It's a little bit longer than usual, but sometimes these topics are a little bit complicated and it's difficult to keep it short. So I do have a question that's popped up here. What about using a trust? Any benefit? Now that is a wonderful question. And I have done a bunch of research on trading in a trust, but I'm not going to be able to just spit out an answer really quick. My short answer would be I would look into it if it were me. It's tricky trading within a trust because everything has to be in the trust and stay in the trust. There is a company that I've mentioned before. I'll put it in the comments here. The company that I like, that I've done research on in the past, is iTrust Capital. Now, itrustcapital.com probably. And I don't know if they deal with trusts or not, but if you want me to do another training on trying to trade within a trust, just let me know, and I'll maybe do that for next Money Mondays training. We can talk about that. We'll just extend this topic today a little bit longer. I'm sorry that I'm not ready to talk about that in depth right now, but my short answer is I think it's worth looking into. So does anybody have any other questions for today or comments? If not, I'm going to say thanks so much for being here. There's a lot more that I could have said on the topic of crypto and taxes. Just the last question that got answered proves that. If you're interested in learning more about my Crypto Guard tax ebook series, you can email me at kelly@lifewithcrypto.com, or you can DM me on Facebook. I really appreciate you all joining me today, taking time out on your Monday evening. Thank you so much for your comments, Mike. I'm glad that you enjoyed the content. So I hope you can see the value of understanding blockchain narratives as a crypto investor. Taxes is just one of many. Understanding this broader landscape will definitely help you make informed decisions. So as always, stay curious, keep learning, and share your thoughts or questions in the comments if you have any that come up after this, and I'll still do my best to answer. So I'll see you all next week. Bye for now.